Hey, happy Thursday. We've got some really strong data showing that the consumer is feeling really good about things lately, but the reality is that our sales numbers are not really reflecting this. So a bit of discrepancy in some data here this past week we'll kind of break down. And then a big question around deflation. Yes, you heard that correctly. With all this talk of inflation, now we start to see a little signs of it potentially coming down, and the topic of deflation somehow comes to the forefront. So we're going to break that down a little bit as well. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and weed out a bit of the noise along the way. So again, this week, by the way, right ahead of the Fed meeting, so get ready. But this week, we had a little bit of discrepancy in some of the data that came out. So if we go back to last Friday, we had consumer sentiment numbers come out. And this number was a huge surprise, showing consumers are feeling really good about things right now, showing that consumers are feeling like, things are a bit resilient and that, there's some optimism, let's put it that way, about where we're at and the future ahead of us here. And we saw the market, really show a little bit of, positive result from this. In fact, over the past couple of weeks or so, I think it's been a sign of this consumer sentiment. The market has had this, very slow, but nonetheless slow grind up for the past few weeks here. And so I think, that kind of speaks to this consumer sentiment number that we saw. Maybe people are starting to feel a little bit better about what's going on. However, we fast forward to this week, and on Tuesday, we had retail sales numbers come out. And retail sales were only up about 0.2%. versus the expectations of about 0.5%. Now, what I want to really point out here that I think is very interesting is to keep in mind how inflation ties into retail sales. For those who do, listen to us weekly here, you've heard me talk about this before, that the reality is that retail sales numbers have been pretty strong looking backwards, but inflation does factor into that. And if you take inflation back out of it, not nearly the same story as the the kind of the data point headline number that we get all the time. So with retail sales showing only 0.2% versus the 0.5% expectations, remember how inflation impacts that as well. And although inflation has slowed, it doesn't mean that inflation has stopped, okay? And that's actually a good segue or maybe kind of teaser into our deflation conversation. But nonetheless, it doesn't mean prices have come down. It just means they have stopped growing as fast. They're still growing even, just not as fast. So even with all that, retail sales were a little disappointing. And then a lot of housing data this week as well. Wednesday, housing starts and building permits slightly below expectations and a little tick down from last month. And then today, existing home sales fell as well. But maybe to tie this all into a nutshell and then a little preview into next week, today we also had initial jobless claims come out, 228,000, so down slightly. But the reason I wanted to bring this up is because next week we have the big Fed decision. So of course, that will be our focus next Thursday. In addition to that, we have consumer confidence, and then we get PCE data next Friday as well. But of course, the big focus for next week is going to be the Fed decision and more importantly, the Fed press conference. I think it is more than likely that we see a rate hike next week. The question is, what will he kind of share in terms of what may be ahead? So stay tuned next week. We'll make sure to break that down as well. Deflation has come up as a very hot topic item here as of late. And actually, we covered this not that long ago as well, really before. I think it was kind of at the early stages of all this inflation conversation picking up. And so the first question I want to maybe pose is to ask you, what is deflation? What does that mean? All right. And the reason I want to start there is because I think there is a lot of confusion around this. The reality is deflation means a general decline in prices. It doesn't mean that the rate of growth slows, right? It doesn't mean that prices are staying flat. It actually means prices are coming down. Okay. So as we see inflation numbers slowing, does this mean that we are in a deflationary period? Well, the answer, of course, is no, right? Although the rate of growth on these prices is slowing. So instead of prices increasing at 5% a year, now it's more like, I think, 4.8. Does that mean that prices are coming down? No, it just means that they are growing slower, but still growing and growing quickly, by the way, as well. So I think that's really important to kind of clear up as we get into this, because I think there's a lot of confusion around that. And when we see inflation rates slowing, it can be natural to be optimistic about that. But the reality is it is still inflation. Let's be very clear about it, right? So, I think as we kind of like bring this back about deflation, is it coming? What does it mean? Again, deflation does mean that prices are actually coming down. And I think, to be very fair, we do often see deflation in certain pockets. Technology is a great example. Some of our software services. I mean, look back to the 1980s to make a very like dramatic version of this, right? Actually, let's go even further, like first computers, right? I mean, these things were the sizes of rooms. They cost tens and tens of thousands of dollars. Here we are in 2023, and we've all got full computer in our hands that costs, I mean, it's still expensive, but $1,000, right? And so prices for technology type of things certainly can come down over time. But the reality is, if you look at it again, deflation is general decline in prices. And if you look at that across the board, if we look at oil prices, we look at food prices, we look at all these different examples, we don't typically see that. Now, there can be periods of it, but it's not a very common thing. So we hear about like Kathy Wood talking about deflation all the time. And I think that's relevant, again, for certain spaces. She talks a lot about technology. In technology, I can imagine that there could very likely be a deflationary period in terms of like the costs of the technology we have, but also the power of that technology. If our phones are still $1,000, the same price they were, I don't know, 5 years ago, but they're doing much, much more, that could be argued that that's a deflationary piece as well. However, in reality, we're still paying the same amount for it. So it doesn't actually like add anything to the economy, if that makes sense. To be very clear, money supply is continuing to drop. So I think this is really important to kind of show here. It is very possible that we start to see some slower price growth for a while, but deflation is an entirely separate conversation, right? When Safeway puts milk on a shelf and they charge $3.99 for that gallon of milk, I'm just making up a number. I'm not sure exactly where we are today. But how often have you gone into the store like 3 years later and seen that gallon of milk decrease? Not very often, if at all. Keep that in mind too, especially if you look at things over a longer period of time. There might be shorter term volatility. Maybe eggs is a good example, where not too long ago they were very, very, very expensive because of a shortage and these kind of more nuanced pieces within there. But here we are, they've decreased a little bit. But again, if you look at things over a longer period of time, inflation is certainly more of the trend. And again, you may see deflationary pockets like technology or something along those lines. But I think first off, it is way too soon to be talking about deflation. I think that we still have a longer period of inflation than many think. Now, not at the same rate, but I think we still have, a good period of seeing this above the kind of 2% target and kind of average that we had been seeing, or that the Fed targets. And certainly don't expect to see deflation anytime soon. I don't want to share that it's not possible at any point. Certainly, if that comes up, we will talk more about it. And again, to be very clear, we certainly could see it in certain pockets. There's no question about that. But I think, I think this was really important to touch on. We're hearing a lot more about it. There's a lot more news stories about it. A lot of people are hearing this conversation. I just think it's a little too early, and I think that inflation is still maybe the main point of focus, at least for the time being. So that was really helpful, or I hope it was helpful, I guess I should say. But I thought it was a really good question to touch on, because it is everywhere right now, and I think these news stories can get a little ahead of themselves trying to find the next thing, or maybe they're sick of talking about inflation, to be fair, which I understand. But I do think that we will be in a period of inflationary situation for a little longer than a lot of people expect. And again, not necessarily a deflationary environment for the foreseeable future here. So hopefully that was helpful. Thanks so much for reaching out with this deflationary question and topic for this week. As always, if you have any questions, just shoot me a message or let me know. I'd be happy to answer them in our weekly update. In the meantime, have a great upcoming weekend. Enjoy the sunshine, and be sure to tune in next Thursday at 3, where we break down the all-important Fed press conference. We will see you next Thursday.